Hey everyone, welcome to Cycle Bull. I hope you're doing well today. All right, so in the last video, I introduced myself and showed you how I called the Bitcoin stop on October 6th to the exact day. But now let's talk about what's coming next. And look, I'm not trying to scare you, but when you line up all the cycles, Bitcoin, S&P 500, gold, the dollar, interest rates, they're basically all pointing to the same thing. And it looks like 2026 is going to be rough. Let me show you why. Let's start with Bitcoin because that's freshest in everyone's mind. So we topped in October 2025. Based on the 4-year cycle pattern, we should be entering the bear market right now. Looking at the previous cycles, 2018, there was 83% drawdown. That took basically 52 weeks. In 2022, it was a 75% drawdown, and it took basically 53 weeks. If the cycle follows the same pattern, we're looking at the peak at 126,000 in October 2025. And a drawdown of 70 to 85% is a bit too much for me, to be honest, considering that Bitcoin now is a mature asset and we have ETFs, big institutions investing in Bitcoin. Um, I'm targeting the bottom between 40 and 60,000. And the timing should be somewhere in Q2 or Q3. That's about 9 to 12 months from the October top, right in line with historical patterns. Now, does that mean Bitcoin goes straight down? No, right? We'll probably see some rallies, some dead cat bounces, people calling the bottom too early. I mean, that's what always happens, right? But the cycle says we're not done correcting until mid to late 2026. And here's the key: Bitcoin does not bottom in isolation, right? It bottoms when everything else is bottoming, which brings us back to stocks. The S&P 500 follows a 4-year cycle, as we said in the last video. The cycle suggests we should see an S&P correction in late 2026. Usually it's around 15 to 25% from wherever we peak. However, considering I'm calling for a recession and a brutal bear market, the correction should be much more significant than that. In the very short term, I think we have some more upside ahead of us, a so-called blow off top. But here's where it gets interesting. If Bitcoin is bottoming in Q3 2026 and S&P typically corrects in midterm years, they should bottom together. And that's the kind of convergence we're looking for. Now let's talk about interest rates because this is crucial. So historically, rate cuts don't happen in good times. They happen when things are breaking. Just look at the pattern. 2001, Fed cuts, dot-com crash deepens. 2007 and 2008, Fed cuts, financial crisis. 2019, Fed cuts, COVID crash follows months later. You see, rate cuts sound bullish, but initially they are usually bearish. Markets bottom only after the Fed is done cutting rates and they are at their historic lows. So the dollar operates on a roughly 3-year cycle. And here's the critical part most people are missing: the dollar is near a 3-year low right now, which means it's about to explode higher. As a matter of fact, it's breaking this resistance line as we speak. So look at the pattern, right? Dollar peaks, risk assets rally. Dollar bottoms, dollar rallies, risk assets get crushed. We are at the bottom of the cycle. The dollar has been weak, and when the dollar reverses and starts rallying hard, it sucks liquidity out of everything else. This is the setup everyone's missing. So Bitcoin topped in October, the S&P is late in cycle, and now the dollar is about to rip higher from a 3-year low. When the dollar rises and rallies in 2026, it's going to accelerate the pain in risk assets. This isn't just not a normal correction, it's a dollar driven liquidation event. The dollar is the missing piece, the deflation king, and it's about to wreck everything. And this is exactly the convergence we've been talking about. This is when all of the cycles line up. If you understand this setup, you can position yourself before it happens. So it's a good thing that you're watching my channel. The opportunity is now. The opportunity is in 8 to 10 months when everyone is panicking. I'm building my cash position because I'm positive I'll need the dry powder for the late 2026. And if you ask me, could I be wrong? Absolutely. Cycles are not perfect. They're probabilities, not certainties. They served as an edge for us in trading and investing. I'll be transparent about this. If the cycles start breaking, if the data changes, I'll tell you. This isn't about being right, it's about following the data wherever it leads. So if you want weekly updates on where we are in each cycle, subscribe and hit the bell. I'll be tracking this stuff closely as we move through 2026. Until next time, manage your risk, stay disciplined, and remember the best opportunities come when everyone else is panicking. See you in the next one. Thanks. Bye.